Good morning friends and welcome to the pre-market view. We've seen some weakness in the US markets over the weekend and they were down about 1.4 to almost about 1.75% as the rate hike relief rally is over, and now the market is focusing on when can we have the next rate hike, and also things are not looking too great in China in terms of the data. So we've seen some weakness in the global markets. Even European markets were down anywhere from 1 to almost about 3.5%. And when we look at the Asian markets today morning, most of the markets are down. Hang Seng is down almost about 1.35%. Japan is shut, but the rest of the markets are showing weakness of anywhere close to about 1%. SGX Nifty is also suggesting that we are going to open down about 65 to 70 odd points after a smart rally that we had seen on Friday, which was primarily driven by the short covering both in the options and in the futures segment. In terms of flows, friends, FIs were net buyers in the cash market to the tune of 635 crore. But adjusting for the FTSE rebalancing, the net sell figure should have been about 600 odd crore, as the buying on account of that FTSE rebalancing was close to about 1200 crore. The domestic institutions were buyers in the cash market to the tune of about 435 crore. And we've seen also FIs buying in the index futures to the tune of about 445 odd crore. Overall, we feel that this was a relief rally and there is not a case for a strong rally in our markets, given the uncertainty in the global markets emanating particularly from China, and the fact that the flows also are not suggesting any kind of a reversal. On that note, let me invite Taran to take you through important FAQs and ideas that we can have from the derivative side.
Good morning friends, I will give analysis on derivatives. In Friday's trading session, it was a gap up opening where market cheers the Fed decision of not hiking the interest rate, and we reacted positively in the initial part of the trade. That is, in the morning trade, we have seen Nifty opening up with a gap of around 50-60 points, and then on it continuously moved higher and made new intraday high, and also have been able to convincingly go past 8,000 levels. However, soon after the European markets, where it was a negative cues from the European markets, where Nifty had seen some kind of selling pressure and eventually managed to close with 1% gain at 7982.55, just below 8,000. On the open interest terms, 5% was added in open interest with increase in cost of carry. Our cost of carry did came up from discount to premium, that is from discount of around 1.5 odd points to premium of around 60.65. So indicating some kind of long position was been built up by market participants in Friday's trading session. On the put call ratio, we have seen an increase in put call ratio from 0.95 to 1. Now this increase in put call ratio was mainly due to the heavy unwinding which was seen in call option. However, put option have also seen an unwinding. Overall put option have seen an unwinding, but the unwinding in call option was quite huge. I have seen in around 43 lakh shares were unwinded in call option of overall strike price of call option, while put option shaded only 6 to 7 odd lakh shares, due to which we have seen a sharp increase in put call ratio by around 5 odd basis point to around 1 odd levels. Now one level to act as a resistance of a market we have seen in the past few incidents, where we have seen a Nifty have taken resistance at around 1 odd levels of the put call ratio, and thereon we have seen some kind of dip. So eventually in today's trade also it been signaling the same since international markets were down, and our market is also, SGX is also pointing out some negative cues. So watch out for that. Indian volatility index have cooled off significantly. After a favorable decision from Fed, we have seen volatility index cooling off significantly by around 16-17 odd percentage to 18.29 levels from 22 levels. Now the options activity, as suggested, most of the call option have seen an unwinding in Friday's trade. In call option, we have seen an highest unwinding from 8,000 to 8,200 strike price. Most of the strike price seen an highest unwinding. However, 8,200 call option is now the highest in terms of open interest, with around 36 lakh shares in it. While in put option, if you see, 8,000 strike price has seen an addition of around 33%. While 7,900 put option has seen an addition of around 18%, while 7,800 put option have seen an unwinding of around 4%. Now 7,800 put option is now the highest in terms of open interest. So the band which was from 7,500 to 8,000 have now got shifted a bit higher. From 7,800 is the lower band, where 7,800 put option is the highest in terms of open interest, and the higher band is now at 8,200, while 8,200 call option is highest in terms of open interest. Now seeing the options data and the derivatives activity, the long positions have been added. Shorts have also got some kind of shorts have also got squared off in Friday's trading session. So eventually in today's trading session, VWAP level of 7875 would be quite crucial to watch out for. There is only one securities in bank period for today's trade, that is Century Textiles. On FIS front, they have bought an index futures. However, there was a mixed kind of positions they have initiated in Friday's trading session, since we are on the rollover, we are on the expiry week also. So hence it's but obvious that FIS do create this kind of positions on the expiry week. There were net buyers by around 470 odd crores, but the open interest of FIS in index futures went up by around 12 odd percentage, indicating a mix of long and short created by them. While in index options, there were net buyers of around 2,858 odd crores, which was much of a short covering. While in stock futures, they continue to cover their short positions. There were net buyers of around 1,090 crores. In stock options, there were net sellers by around 216 odd crores only. As suggested, our 5-day VWAP stands at 7875 with a lower range at 7875 and a higher range at 8000. In today's trading session, since we have been pointing out a bit negative cues, a gap down opening of 50-60 points, but a crucial level of 7875, that is a VWAP, should be watched out quite closely. Market participants should form long positions anywhere near 7,900, 920 or level, skipping a stop of 785060, which is at around our VWAP level. So in today's trading session, I suggested SGX simply is pointing a bit negative sign. It's down by around 62 odd points at 7906.50, indicating some kind of negative opening can be expected in today's trade. That's it from derivative. Thank you.
Friends, let me take you through Sharekhan pre-market action, starting with trading ideas. First of all, a long call on NTPC, as it has been allotted Mandakini week coal block for about 4,000 megawatts, and it may exceed capacity addition target of about 11,920 megawatts. So one can go long on NTPC. The stop was a 124, target of about 131 to about 134. Torrent Power, some positive news as the company is likely to get the subsidy for the next 6 months. So one can go long there with the stop loss of 161 and a target of about 170 to about 172. Dish TV, there is a positive news as the government is looking at hiking the FDI cap to 100% in the DTH and cable networks. That's a positive for Dish TV, so one can go long there with the stop loss of 106 and a target of about 112 to about 115. In other news and developments, 5 gas-based power plants belonging to NTPC, Torrent Power, CLP India and Gujarat Industries Power have qualified for the imported gas through an e-auction route. Power Mac backs the order of about 167 crore from JP Group. Sun Pharma sales divisions of Rainbaxi to Strides Acco for 165 crore, and BPCL is all set to start work on 5,000 crore complex in Kochi. REC gets shareholders note to raise about 42,000 crore funds. ITC is planning to increase its investment in the Punjab Food Park to 1,400 crore from about 700 odd crore. NALCO to spend about 1,000 crore on developing coal blocks. And Nagarjuna's plant has got stuck over the payment of salary to employees and finance the cost of preserving the equipment. Bombay High Court has okayed the merger of Tata Steel and Tata Metallics. Sugar, the government is giving green signal for 4 metric ton of sugar exports from India. That's a bit of a positive for the sugar companies. Government hikes import duty on crude edible oil and refined edible oil by 5% each. And Jubilant Life gets USFDA note for anti-migraine tablets. Here is a list of stocks with positive and negative bias for the day traders. Stocks with positive bias are IRB, UPL and Tata Global. Stocks with negative bias are Tata Motors, Bajaj Finance and SKS Micro. Stocks for investments that we like at this point of time are Aditya Birla Nuvo, Britannia, HDFC Bank, TCS and Maruti. That's it from all of us, friends. Have a great trading session and see you tomorrow morning at the same time.